What if the most valuable asset you could own in the near future isn't the money in your bank? What if the very idea of money, the paper in your wallet, the numbers on your screen, is in the middle of a radical, unstoppable reinvention? That cash you hold, the balance you check, it's all becoming a fossil. We are talking about a slow, gentle evolution here. This is a complete rewiring of the global financial system. And right now, we're standing on the edge of the biggest wealth transfer in modern history. You've likely heard of the Great Wealth Transfer, an estimated $84 trillion expected to pass from baby boomers to their heirs by 2045. But that's just the inheritance part of the story. The real story, the one most people are missing, is about technology. Those who don't get a handle on this tectonic shift risk getting left on the wrong side of financial history because this transfer isn't being run by governments or big banks. It's being driven by five specific connected technologies that are quietly making your old way of thinking about money obsolete. In the next few minutes, we'll break down these five technological pillars. We're going to show you exactly what they are, how they're already creating and destroying fortunes, and what it all means for your wealth. This isn't some 2050 forecast. This is happening right now. And by the end of this, you'll see the world of finance not for what it is, but for what it's quickly becoming. The first pillar isn't just a new asset, it's a whole new parallel financial system. You've heard about cryptocurrencies for years, probably framed as a wild, speculative gamble. But that narrative is officially outdated. We're moving past simple speculation and into an era of deep structural change. This is no longer a niche hobby. Leading forecasts anticipate the global crypto market cap could approach 10 to 12 trillion by 2030. To put that in perspective, that's more than the entire economies of Japan and Germany combined. But the real story isn't just about size, it's about who is driving this growth. The big money is officially here. Major financial players like BlackRock, JP Morgan, and Fidelity aren't just watching anymore. They're actively building products and infrastructure. The approval of Bitcoin ETFs created a regulated bridge for trillions of dollars in institutional capital to flow into digital assets, turning them into a serious portfolio component. In fact, recent surveys show institutional investors are jumping in, with a significant percentage planning to increase their allocations in the coming years. But this new system is so much more than Bitcoin. The real engine of this parallel economy is the rise of stablecoins and decentralized finance, DeFi. Stablecoins, which are just cryptocurrencies pegged to currencies like the US dollar, have become the lifeblood of on chain trading and enable everything from nearly instant cross border payments to hedging against inflation. At the same time, DeFi is building an open source, permissionless version of every financial service you use today. Lending, borrowing, trading, earning interest, it's all being rebuilt on the blockchain without the banks. The amount of money locked in these DeFi protocols is projected to potentially reach over $200 billion by 2030, forming a major financial system in its own right. So, where's the wealth transfer? It's simple. Wealth is flowing from the old, slow and expensive financial system to this new, fast and efficient one. Early adopters are cashing in on opportunities that don't exist in traditional finance. Younger generations, like millennials and Gen Z, are leading this charge. They are far more likely to own digital assets and are banking differently, moving their economic lives onto these new platforms. The wealth isn't just being inherited, it's being actively rerouted into a completely new financial world. The second pillar, dismantling our old idea of money, is tokenization. And this might be the most profound shift of them all. Picture this: taking a real world asset, a skyscraper, a masterpiece painting, a private company, and converting its ownership into digital tokens on a blockchain. That's tokenization. It turns illiquid assets into tradable digital shares you can buy and sell as easily as a stock. For centuries, owning a piece of the world's most valuable assets has been nearly impossible for most people. You can't just sell 1% of an office building. This friction has locked the vast majority out of some of the best wealth creating opportunities. Tokenization shatters those barriers. By fractionalizing ownership, it drops the price of admission from millions of dollars to maybe a few thousand, or even less. Suddenly, asset classes that were once reserved for the ultra wealthy, like private equity, commercial real estate, and fine art, become accessible to a much wider audience. The scale of this is staggering. Reports from firms like Boston Consulting Group project the market for tokenized assets could rocket to as much as $16 trillion by 2030. This isn't a fantasy, it's already starting. Major financial institutions have begun to tokenize everything from private funds and bonds to precious metals and real estate. This trend completely changes the wealth transfer story. It's not just about money moving from one generation to another, it's about democratizing access to the things that create wealth in the first place. Imagine earning a slice of rental income from a portfolio of global properties, or owning a piece of a venture capital fund that was once off limits. That's the promise of tokenization. It unlocks trillions of dollars of value trapped in illiquid assets and spreads the opportunity to own them more widely. This isn't just about changing who holds the wealth. It's changing the very structure of ownership itself. The world is shifting from a model where you own stocks and bonds to one where you can own a piece of almost anything of value. I know this is a lot to take in, and we're only at the second pillar. These shits are complex, but understanding them is the first step toward navigating the future of finance. If you're finding this valuable and want to stay ahead of the curve, do me a favor. Hit that subscribe button and ring the notification bell. We break down these critical trends every week, so you won't get left behind. Now, let's get to the intelligence that will manage all this new value. The third pillar orchestrating this massive wealth shift is artificial intelligence. But I'm not talking about the simple chatbots you've already seen. We're stepping into the era of agentic AI, intelligent autonomous systems that are becoming the core brain of the financial industry. For years, the best financial advice and the most sophisticated trading strategies were reserved for those who could afford expensive human advisors. AI is systematically dismantling that advantage. By 2026, experts predict AI will move far beyond simple automation to become a strategic driver of everything from risk insights to hyper personalization in finance. On an institutional level, AI is already a beast, helping banks automate underwriting, detect fraud, and analyze millions of data points in real time. But the real revolution for your personal wealth is how this power is being democratized. The next generation of financial tools won't just show you data, they'll give you proactive, predictive insights. Imagine an AI financial agent acting as your personal CFO, autonomously scanning for better mortgage rates, rebalancing your portfolio, or even negotiating bills for you. These AI systems will learn from your behavior and execute complex tasks without human bias. It's a profound move from active management to autonomous management. When combined with other tech like voice, you'll soon have AI advisors offering hands-free portfolio insights and financial coaching. This brings us back to the wealth transfer. This technology transfers advantage. The analytical edge, once held only by big institutions and the super rich, is evaporating. Sophisticated financial management is becoming a utility accessible to anyone with a smartphone. Younger tech native generations are already demanding these AI driven tools. When everyone has access to a world class financial analyst in their pocket, the playing field starts to level. Building wealth becomes less about who you know or what you can pay for advice, and more about the quality of the tools you use. AI is democratizing financial sophistication and transferring the power to build wealth to a whole new generation. The fourth pillar changing the future of money is the complete deconstruction of your bank. For generations, the bank was a monolith, a single trusted place for everything. That model is dying. We're watching the great unbundling, where nimble fintech companies are picking apart every service a bank offers and doing it better, faster, and cheaper. This is happening thanks to two powerful forces: neobanks and open banking. Neobanks are the sleek, digital first banking platforms that offer lower fees and innovative features that legacy banks have struggled to copy. The best ones aren't just putting a digital face on old processes, they're building flexible, AI first platforms from the ground up, with features like crypto native cards that let you spend stablecoins, bypassing old payment rails entirely. But the real catalyst is open banking. This is a framework that requires traditional banks to share customer data, with your permission, with other fintech apps. This means your financial data is no longer locked in one bank's vault. You can grant different apps access to it, letting them build new services on top of your existing accounts. The impact is explosive. The value of payments facilitated by open banking is projected to surge by over 2,800% between 2021 and 2026, reaching over $116 billion. And by 2026, we're moving from just open banking to open finance, which will cover your entire financial life: investments, insurance, mortgages, and digital assets. So, how does this accelerate the wealth transfer? It's simple. It redirects money away from the big, slow institutions and puts it back in the hands of consumers and innovators. Traditional banks have long profited from high fees and customer inertia. Open banking forces radical transparency and competition. It lets you effortlessly move your money to wherever it's treated best, whether that's a high yield account from a neobank or an automated investment platform. Wealth is shifting from the institutions that relied on you not bothering to switch to the agile players that deliver the most value. The bank is no longer a place, it's a set of functions that you can assemble and control yourself. The fifth and final pillar is the radical evolution of payments. This isn't just about moving from plastic cards to digital wallets. We are talking about a fundamental upgrade to the speed, intelligence, and programmability of money itself. For decades, our financial system has been running on ancient plumbing. When you swipe a card, the money doesn't move instantly. It goes through a complex multi-day settlement process. That whole paradigm is being replaced by real-time payment systems. Countries around the world are rolling out new infrastructure that allows for instant 24/7 settlement, freeing up huge amounts of capital that would otherwise be stuck in transit. Beyond speed, payments are getting smarter. We're moving beyond a card dominated world to one of account to account, A to A payments, which are direct transfers that cut down on fees and fraud. This is complemented by a boom in digital wallets, buy now, pay later services, and eventually biometric payments. But here's where it gets really interesting: money itself is becoming programmable. This means you can embed rules directly into a transaction. Imagine a government benefit that can only be spent on groceries, or an insurance payout that's automatically released to a mechanic only when the car repair is verified as complete. Stablecoins, with their smart contract capabilities, are perfect for this. This connects directly to the wealth transfer by rewarding efficiency. Businesses that adopt these low cost, real time systems gain a massive competitive edge. The wealth here is being pulled away from the legacy payment processors who profited from the slow, inefficient old system. That value is now being captured by the businesses and consumers who embrace a world where money moves intelligently and at the speed of light. So let's recap. We've just walked through the five massive technological forces that are completely redefining money. First, the rise of a parallel financial system with crypto and DeFi, creating new tracks for value to run on. Second, the tokenization of everything, unlocking trillions in real world assets and giving more people a shot at ownership. Third, the power of AI, putting a financial genius in everyone's pocket. Fourth, the unbundling of the bank, forcing a shift toward user control and fierce competition. And finally, real time, programmable payments that cut out the middlemen. These aren't five separate trends, they are five pillars of one interconnected revolution. Your AI will manage tokenized assets held in a neobank wallet, which are then transacted instantly using stablecoins over new payment rails. The great wealth transfer isn't a single event you can circle on your calendar. It's a continuous, accelerating process driven by this technological wave. It's a transfer of value from slow to fast, from closed to open, from centralized to decentralized, and from institutions to individuals. The new definition of wealth won't just be about how much money you have, but about how accessible, intelligent, and efficient that money is. The future of money truly isn't what you think, it's already here, being built by those who understand the old rules no longer apply. The only question left is, where will you be standing when the dust settles? How much of your own wealth do you believe will be digital in the next 5 years? Share your thoughts in the comments below. And if you want to continue making sense of this new financial world, make sure you're subscribed.